All right. Hello, everybody, and welcome to this LFT Lunchtime webinar. My name is Georg Ringe. I'm a professor of law and economics at the University of Hamburg, and it's a great honor to welcome you all to this exciting event, which is a first in many ways. First, because it involves two speakers. We're delighted to have with us Leckow and Wann from the BIS. Who both work at the BIS Innovation Hub, and they will be speaking about RegTech and SupTech, so regulatory technology and supervisory technology. So it's really exciting to have you with us and to hear a little bit about what the BIS is doing in that context and how they are supporting institutions and governments around the world in designing those new technologies and those new solutions to addressing fintechs and financial technology on a broader scale. So thanks so much for being with us. The event will be done as follows. We'll have about 20 minutes presentation, and there is ample time for discussion and questions afterwards. We have 60 minutes in total, so hold back and keep your questions for afterwards. That said, if you have anything that is really burning and that is addressing something that you would like to ask during the presentation, then you can do so, right? It would be great if you raise my attention and then I try to moderate it and try to smuggle your question in. If not, we have, as I said, enough time afterwards. Final housekeeping thing is you're welcome to switch on your video. It's always nice to see people and their faces and their reactions. But if you could please mute yourself when you are not speaking, that would be great for acoustics generally. That's it from my side, and I now hand over to Ross to kick it off. Thanks so much.
Well, thank you very much, Georg. It's a great pleasure for me and for Joy to be here today and to participate in this webinar. And we would like to thank you, Professor Ringe, and also the University of Hamburg for inviting us to participate. As Professor Ringe just said, I'm Leckow. I'm a senior advisor, Fintech, strategy and legal in the BIS Innovation Hub in Basel. And I'm joined by Joy Wann, who is an advisor in the BIS Innovation Hub Singapore office. What we would like to do today is to provide you with an overview of RegTech and SupTech, what they are, how they're being used, and what issues they present. We'd also like to discuss the BIS Innovation Hub and what the hub is doing in this area. Perhaps before we go through the overview of the presentation, perhaps one caveat. I think it's important to note that while there's a huge amount of discussion and experimentation around RegTech and SupTech, we're still, I think, in early days in terms of their actual implementation. This is particularly true with respect to SupTech, where supervisors are only beginning to experiment and actually use new technologies. And many of the policy issues that we raise at the end, I think it's important to remember that we may be at the beginning of a conversation about some of these issues without necessarily being able to provide answers. So what we'll do today is to provide you, first of all, with an introduction to the BIS Innovation Hub, its mandate and activities. We'll then turn to RegTech and SupTech with definitions, use cases, and their benefits and challenges. We will then talk about the international collaboration in this area, particularly through the BIS Innovation Hub and the work that we're doing. And finally, we'll turn to some of the broader legal and policy issues. So maybe starting with the Innovation Hub. The BIS Innovation Hub is part of the Bank for International Settlements in Basel. It's a new initiative of the BIS that was announced last year with a mandate to foster international collaboration on innovative financial technology within the central banking community. It has essentially three pillars to its mandate. The first is to conduct research and analysis to develop in-depth insights into critical trends in fintech of relevance to central banks. Secondly, to actually develop new technological applications that are designed to address particular problems in the global financial system that can be shared with the central banking community and beyond. And thirdly, to develop a network of central bank experts who are focused on issues around innovation. The Innovation Hub is based in Basel, but it has 3 regional centers, each of which has been launched in cooperation with a host central bank in the relevant country. In Switzerland with the Swiss National Bank. Secondly, in Singapore with the Monetary Authority of Singapore. And thirdly, in Hong Kong with the Hong Kong Monetary Authority. All 3 centers are up and running and are actively engaged in projects now across a wide range of areas, both in terms of technology and parts of the financial sector. To give you a flavor of some of the projects we're working on, we're looking at distributed ledger technology to facilitate security settlement and trade finance. The use of artificial intelligence as a foundation, so the use of digital identity as a foundational infrastructure for the provision of financial services, and a few RegTech and SupTech applications that Joy will explain in a second. And I should also say that the Innovation Hub is already expanding. Last week, the BIS Board of Directors approved the establishment of 4 new hub centers in different parts of the world by end March 2022, in Toronto in cooperation with the Bank of Canada, in London with the Bank of England, in Stockholm with the Swedish Riksbank and the central banks of Iceland, Norway, and Denmark. And finally, a 4th center done in cooperation with the ECB and the Eurosystem, with locations in Frankfurt and Paris. And we've also, we'll be establishing a strategic partnership with the Federal Reserve System based in New York. If I were to provide one word to describe what the Innovation Hub is all about, it's really about international collaboration in bringing all the excellent work that central banks are doing onto a global platform where it can be scaled up and shared globally. So now I should say that, as I mentioned earlier, the Innovation Hub will be very actively involved in RegTech and SupTech. So perhaps it's appropriate now to talk about what RegTech and SupTech are and why they're important. Well, both of them are examples of Fintech, the application of financial technology for particular purposes. With respect to RegTech, it looks at the use of new financial technologies for the purposes of facilitating regulatory reporting and compliance by regulated financial institutions. SupTech looks at the application of new technologies by regulatory and supervisory authorities for the purposes of regulation, supervision, and oversight. So these are really 2 sides of the same coin that are designed to strengthen compliance and supervision. Now, when we talk about new technologies that form the basis of RegTech and SupTech, what are we talking about? I think it includes a number of new technologies. First of all, artificial intelligence and machine learning, big data collection and storage, blockchain, particularly for the purposes of information sharing, digital identity, and cloud computing. And the various applications that we'll be looking at will use these technologies either individually or together in different ways. So I guess before we talk about how they're being used, the question is, why are they being used? Why do we need these things? And I think the answers are rather straightforward. I think it's fair to say that there are a lot of problems with regulatory compliance and supervision. Historically, these things have been very expensive, inefficient, and are really, I think, in some ways beginning to fall behind market developments. In many cases, the data collection is still done manually. It's submitted to financial institutions in paper form or in a spreadsheet via email. The staff of financial institutions validate it manually to prepare for analysis, which sometimes will be done manually. Storage of information is fragmented across spreadsheets or desktop databases. And the data analysis itself is performed in relatively simplified spreadsheet models. Of course, many regulators and supervisors have made significant progress in automating some of these processes. But it's important to remember that since particularly the global financial crisis, regulation has become, I think, much more complex and burdensome, and just dealing with the sheer amount of data that now forms, part of financial activity is a challenge. And it's for this reason that more effective tools using new technologies are needed to help compile data, report it, and process it. So maybe I'll turn now to Joy to explain a little bit more about how RegTech and SupTech are actually being used.
Okay, well, thank you very much, Ross. Yes, I guess to understand what RegTech and SupTech is, it'd be good to actually go through examples or use cases. So I'll take you briefly through 4 use cases to illustrate how firms and supervisors are adopting RegTech and SupTech. I'll start with this one. It's probably the most established case that banks have deployed since the financial crisis. Now, the reason why I mention that is because post-crisis, one of the weaknesses that were exposed were basically very poor risk data gathering and reporting within banks. Data management has also been very, very heavily manual, as Ross has suggested, and storage has been very fragmented across, let's say, old-fashioned spreadsheets. So many banks have turned to new generation software automation tools to minimize reporting errors and improve efficiency. And this is basically banks automating the way they source data, aggregate it, and generate regulatory reports. And, for example, these solutions allow for identifying and keeping track of changes in regulatory requirements at global and local levels, and also allows real-time monitoring of compliance and risk. So as seen in this slide, automated validation checks built in can also allow for this wonderful dynamic data visualization in business and risk dashboards, which basically allows for improved analytical processing, as well as for deeper analysis and descriptive insights. I mean, the practical benefit, of course, is it saves senior management a lot of time, as it's there and as an instant report. So let me turn to the second one, and this is of an emerging RegTech use case, and this is in the space of AML and CFT. So this is another area where banks are increasingly exploring technology. They're turning to new technologies, to solve for very complex as well requirements here. In particular, they're looking at artificial intelligence and machine learning techniques. These are holding a great promise, as they can be used to increase efficiency of the measures, and also the AML framework from KYC to transaction monitoring. Banks and other financial institutions are also exploring artificial intelligence platforms because of the power of this technology that can identify patterns and relationships in massive, massive amounts of unstructured and structured data sets. So this technology is capable of being scaled across environments, across different clouds, connect data from any source, internal and external, with very sophisticated encryption methods. It can build or identify basically causal links between a very wide range of unstructured digital activity. So, for instance, web, mobile, social media, video, surveillance, satellite, etc. So it's actually very powerful, and by this it can then determine basically behavioural abnormalities. Some of these solutions are already being used on a global scale to detect criminal financing transactions, money laundering, etc. But I do stress that it is still emerging, and supervisors also are still perhaps trying to understand how they can be used prudently. Let me turn to now SupTech, and the first case that I present here is basically one that is almost in production. So the UK authorities have actually been the front runners developing SupTech tools in the area of regulatory reporting. So they have basically piloted a project which is called the Digital Regulatory Reporting Pilot. And the aim of this is to basically reduce the regulatory reporting burden on firms and supervisors, to be honest, by making it far more efficient. and improving the quality of the something like 500,000 regulatory reports that supervisors receive each year. So for the first time, firms, the ones you see on the screen, and regulators have actually come together to try and solve the problem. So after an initial proof of concept in 2016, these stakeholders are now basically turning this pilot, like I said, into production for use. So the underlying sort of technology of this project is that the regulator, it basically connects the regulator to banks through the use of blockchain and API technology, where the regulator sits at the heart of this platform. So the rules are transformed into code, automating the process and allowing regulators to request data and for firms to quickly and simply share it without the need to have to interpret it. So compliance checks can be completed in a near real time, and regulators can get the information they need when they need it, making the whole process simple, efficient, and far more effective. They are currently in stage 3 of the project, where they will talk about scalability and propose a roadmap for implementation. So the next use case I raise is the first cross-border use case of SupTech. So in this instance, a number of stakeholders have developed the API Exchange, or APIX. It's the world's first cross-border open architecture API marketplace and sandbox platform. Quite a mouthful. Basically, in which participants can integrate and test solutions with each other via a cloud-based architecture. So, to put simply, through APIX, financial institutions, fintech firms can basically discover one another on a curated global marketplace. They can design experiments collaboratively in a sandbox environment and then deploy innovative solutions rapidly at a much lower cost. So for financial institutions, the key benefits are that they can discover and work with basically vetted international fintechs on a secure platform. It minimizes due diligence, and it can create successful prototypes in days. So this is definitely a win for incumbent banks. And certainly for fintechs, the platform enables firms to build basically market credibility as being listed on APIX, increases the credibility of the brand, making it easier to sell to perhaps very prudent banks, risk-minded banks. And it also enables these fintechs to understand supervisory problem statements. It minimizes the time and cost as well to develop these proof of concepts and prototypes. Now, having said all that, and Ross said this at the beginning of the presentation, I mean, despite all the very good progress being made by both financial institutions and regulators, I should note that RegTech and SupTech is still not widely adopted. So as Ross has said, banks have been much better in this space. Probably around 1/3 of global banks have RegTech tools in place. But supervisors are definitely lagging, with various surveys indicating that less than around 20% of supervisors worldwide have adopted SupTech tools. And the reason for this is that there simply are a number of ongoing challenges that impede the faster adoption of these technologies, some of which we've just put on this slide for information. But perhaps from a policy angle, one of the biggest challenges is that the current bank regulatory, supervisory and licensing frameworks basically generally predate the emergence of technology-enabled innovation. Some authorities are addressing this, they're updating their guidance in certain areas, but really for the most part, the regulatory framework is still largely based on pre-existing business models. Another issue that comes up from conversations with authorities and banks is that basically the talent pool, resources and the need for expertise are without doubt major issues for both supervisors and banks. This is simply because the demand for data scientists and engineers is higher than supply. And this demand continues to grow as both incumbents and firms try and build a digital infrastructure, which includes storage on the cloud to cyber resilience. And for supervisory authorities in particular, I mean, competing with the private sector and tech firms to attract this talent is just simply not feasible. Another thing we hear a lot is that the lack of transparency around these technologies, as an example, the use of AI and ML, give rise to what's called black box risk in decision making. And that is simply, it's very difficult for human users at financial institutions and at supervisory authorities to grasp how decisions and outputs generated by these machines have been formulated and therefore can be explained. So clearly, if boards and their supervisors are unable to understand how these models generate outputs, they will just have less inclination to want to use them in the first place. We also hear a lot from the banks particularly that collaboration and building an ecosystem of alliances and partnerships with fintechs is incredibly important, not just for the success of digital transformation, but to build basically a cultural change as well within banks. But these new and innovative partnerships often also introduce new sets of risks that may fall outside of a bank's risk appetite. And in a similar vein, we see that digital transformation, it requires a certain degree of uncertainty, experimentation, and to use that expression, sort of a fail fast mentality. And, having myself worked in the regulatory community for many years, I can see that these attributes do not always sit very comfortably with prudent supervisors and risk-minded financial institutions. So I guess this leads to why we're here today. The establishment of the BIS Innovation Hub is simply a recognition by central banks that there is an opportunity to build scale simply by jointly developing RegTech and SupTech solutions that can be deployed globally. And this would enlarge the universe of high-quality solutions to spur critical innovations in areas that would address our common pain points. Importantly, we would avoid doing this in silos. So trusted collaboration between regulatory authorities, financial institutions, and external technology experts may therefore be the key to building and fostering RegTech and SupTech adoption. So 2 BIS Hub initiatives are underway to enable this trusted collaboration. The first is, together with the Saudi G20 presidency, the Hub is co-hosting the first global virtual Techsprint initiative. So basically, this is the first time a global initiative is being held for RegTech and SupTech solution development. So using the APIX platform model outlined earlier, fintech firms have actually been invited to develop innovative technological solutions that are fit for purpose to address real challenges faced by supervisory authorities, and that can be readily deployable in interested jurisdictions. So these challenges relate to areas like dynamic information sharing, this is real-time dynamic information sharing, monitoring and surveillance, and regulatory reporting. We have more than 250 registrants, 128 solutions received from around, I can't remember what it was, about 45 jurisdictions spread across all regions of the globe. So clearly there is a lot of interest here. Another initiative currently underway by the Hub is tracking and monitoring of fast-paced electronic markets. So foreign exchange and other financial markets have undergone profound structural changes over the last decade, and as a result, trading occurs at very, very high frequencies, taking place across multiple venues and involving new types of financial institutions. So these trends make tracking and monitoring of these very fast-paced electronic markets much more challenging for central banks. So to address this, the BIS Hub at the Swiss Centre is developing a prototype of a central bank specific real-time tool for market monitoring. The cloud-based stream processing platform will process real-time financial data feeds and compute relevant liquidity and market risk measures. So the monitoring tool will initially focus on foreign exchange the spot market, but this will be extended to, for instance, to futures and other possible treasuries, for instance, at a later stage. So having said all this, Ross and I so far talked specifically about RegTech and SupTech in this presentation, but we think it's very important to highlight that there are a number of policy and legal issues related to fintech more generally. So these on the screen are just a snapshot of some of the main ones that the BIS and its committees and policymakers globally are currently grappling with and deliberating. And in many ways, they are all interconnected. So for example, I spoke earlier about one of the challenges being that the current global regulatory frameworks predate changes in digital innovation. And we can see this very clearly with debates, for instance, around big tech firms and the regulatory perimeter. So there are growing concerns that certain fintech players are fundamentally changing how we have come to understand financial intermediation, and that the same rules should apply to the same types of activity regardless of who provides them. Incumbent banks, for instance, will argue that the current frameworks do not promote a level playing field. There are also concerns about market concentration and the financial stability risks that this creates. For example, with only a handful of big techs providing cloud infrastructure, I mean, it is not inconceivable that soon the world's data will be held by a number of private corporations. So I touched briefly on some challenges related to the technology itself, particularly with respect to black box risk. But there is also the question of whether, we all need to become data scientists and experts in the future in order to ensure that human judgment can still be applied to machine-generated outputs, and that the underlying ethics of such decisions can also be arbitrated. So Ross, maybe I can now turn to you to now deal with some of the issues around data as well.
I'll be very brief. It'll take less than 1 minute here just to maybe lay out a few of the issues, but a lot of them have to do with the ability either of financial institutions or supervisors to use particular types of data. On the supervisory side, for example, many of the new applications are looking at making use of non-traditional data from non-traditional sources like social media sites, in particular in developing a case around a person of interest. This may raise questions of data privacy. There are also questions as to what degree supervisors can provide data to third-party firms who are actually helping them develop these new applications. And it's for this reason that many of these applications are being developed in-house to avoid that problem. And finally, particularly when one gets to cross-border applications, there are questions as to what degree supervisors can actually share some of the data they actually acquire or develop in the course of using these applications with supervisors in other countries. But I'll stop there.
Great. Joy, is that the conclusion of the talk, or did you want to?
Sorry, that was supposed to be the conclusion, yes. And that is certainly, we would welcome, obviously, cross-sectoral dialogue here. These are cross-sectoral issues, and we would welcome input from the academic community. Yes.
Excellent. Thank you so much. That was really terrific. And I should say, I would happily reciprocate that. I think it's so fascinating to have those topics that we as academics think about and discuss and write about. To have some, people who are really working on these things in practice, speaking to us and sharing their experiences. And you've been explaining a fascinating set of issues that are underway, and it's really been eye-opening. So thanks so much for this. I'm sure that there are many questions in the room, so maybe we open it up for discussion for everybody now. If you want to ask a question, it's a good idea to either use the sort of raise hand function or simply send a quick thing on the chat, and I will try to moderate this. One small thing is maybe Joy, you can take off your presentation, and we have everybody on the screen. And also, please, feel free to switch on your video if you would like to. It's always nice to have a few faces that we can see. So first question is, I think, Roy, you were first.
Okay, hi. So thanks very much for the very interesting presentation. I wanted to ask regarding the aspect of the black box risk that you mentioned, because it seems to me that from a law and economics perspective, there's a trade-off. If you make it completely untransparent, there's a fear that people will not want to get in because they don't know what they're after. On the other hand, if you make it transparent, it makes it much easier for people to manipulate the system. So I think there was a talk I attended a while back and it was about credit ratings. And if you know how the algorithm works, even if it's something that is usually not intuitive, say, people that have yellow tomatoes are more likely to pay their mortgage. So I start growing yellow tomatoes, so then the algorithm thinks I'm okay. So I'm wondering kind of if you have any thoughts on how to balance these things.
Ross, shall I take that one now?
Go ahead. Maybe I'll add after you lead off.
Okay. Certainly when we talk about
Hello?
Hello, we lost Joy.
We lost you, Joy.
We lost you, Joy.
Can you hear me now?
Yes.
Yes.
Ah, sorry. I think when we talk about this topic within the context of RegTech and SupTech, we have to also be very, very mindful, of course, that we're talking about banks and regulators. So we are already starting from a premise of very risk-minded, fairly conservative and rather prudent participants here. So I've had countless discussions about this. So, you know, the benefit of this technology is it actually improves the effectiveness and efficiency of say, for instance, the credit scoring type processes and many others as well. But at the same time, we will have banks sort of stressing to us that, yes, it's very, very important for the human element to be there, to override perhaps whatever comes out, to use basic common sense and judgment that does this make sense with all the inputs going in? Can I look at this and say, does this from a purely common sense perspective make sense? The problem with that is when you have data, maybe it's particularly biased. Credit scoring is one area where there is sufficient amount of bias there, and there are also various different arguments about the ethics of doing this to begin with anyway. But it really does come down to whether or not us as humans can oversee with common sense whether or not some of the outcomes produced make sense effectively. Now, that's the sort of practitioner angle. When you start talking about banks, for instance, and they have governance procedures and the like, and they have boards in particular. So one of the biggest issues that came out of the global financial crisis, for instance, is that basically a number of boards didn't know how their banks were calculating, for instance, their internal ratings models, for instance. So they didn't actually know what the risk parameters were going into the capital machine, and therefore capital levels became quite low, and the rest is history. So one of the lessons coming out of that is that basically boards really need to understand what these models are doing and how they're being generated. And there are a lot of debates around, is it really up to the board to have to know these very, very specific inputs and what have you? But so there is this tension between the practitioners who will apply their human judgment and explain to the board why they think that maybe these models are superior. But at the end of the day, the boards need to get comfortable as well. And if they can't understand this in a reasonable way, then you will again have a little bit of pushback as to whether or not they can be prudently used. Sorry, I'll stop there.
I think, and from the supervisory side, I think there's also a potential legal issue using black box tools, in the sense that if a regulatory decision taken on the basis of that tool is challenged, the regulators will have to be able to explain how it works in court. And if it's completely opaque, they'll be exposing themselves to legal risk, I think.
Okay, great. Next question is from Chris. Christopher Roof.
Yes, thank you. Yeah, also from me, thanks for this fascinating presentation, which was also very enlightening to me. I have a question regarding the risks of RegTech and SupTech. So maybe in a way you could say that, especially looking in the future, that RegTech and SupTech and the interplay of both is outsourcing regulatory activity to algorithms. And so who designs or supplies those algorithms? I guess it's probably mostly coming from the industry side, because they have, as you said, the far better resources. So I'm wondering, are you worried that there's a risk that this might, I don't know, slowly lead to a type of regulatory capture in which regulators too much rely on algorithms made by the industry to oversee that exact industry? So maybe there's also a parallel to the Basel II problem. I think that Georg just touched a little bit, where regulators too much relied on the risk models of the industry.
Maybe I can lead off quickly and turn over to Joy, but I think it's a very interesting question. And you know, there certainly is a risk to the extent that supervisors rely on somebody else, but perhaps it's one of the reasons why some of these applications are being developed in-house. You know, the issue of regulatory capture, I'm not so sure, but generally I think supervisors have to ensure that they're in control of these things, and also that there is a human element in their application. So it's not just the algorithm. But Joy, why don't you add?
Absolutely. I think I'm very certain that the supervisors I know would not give up their on-site inspections, their meeting of the banks. They're going through and talking to them face-to-face about their business models, about their risks, etc. So I can't see a future where the supervisor would be completely absent from those conversations and those discussions. Now, where we do see perhaps benefit is basically a sort of a process of discovery and learning from one another, in that sense that supervisors can join forces with certain technology providers, so that those technology providers know what the needs and pain points are for supervisors, but supervisors can also then explain to technology firms exactly what their requirements need. So this is where, for instance, the hub steps in here to try and facilitate that collaboration, to facilitate that common understanding as well. And I think partnerships are really key here. It's not about capture per se, but really just understanding some of the mutual requirements per se. But I can't see a future where the human supervisor does not step in and use a level of judgment.
All right. It would have been surprised. I would have been surprised if you said, "No, yeah, I'm completely to capture." Yes, but you've done that very elegantly. Next question I have here from Andres Rodriguez. Could you switch on your video, please? Yeah. Hello.
Yes, thank you. Contacting you here from the Dominican Republic, other side of the world. So,
welcome.
Thank you very much. First of all, thank you very much because of this all effort you're doing during this pandemic and to keep us updated on this type of issues. I have a question that's linked to the black box mentality and the mandate of Central Bank of Business of Consumer Protection. I wanted to know if in the future, do you expect that central banks have some type of responsibility regarding the algorithms that play a part in determining, for example, credit scores or certain aspects of consumers in the financial systems? If you see a central bank regulating the use of the algorithm at the same time while using the same technology to supervise and regulate, like you just explained?
Well, I think it raises a very interesting question of algorithmic governance, because obviously this is not something that supervisors have done in the past, but in particular with things like algorithmic trading. Joy may correct me, but it's been more on the processes involved in their creation rather than the algorithm itself. But you could argue that in future they may have to do this, but that would require an enormous commitment of resources on the part of the supervisors. And this is, I think, happening to some degree already, but they have to go out and acquire skills that they don't currently have. But Joy, would you like to add?
Yeah, absolutely. This is a very, very good point. There are a number of supervisors and central banks who recognize this already. They have issued guidance around this. So, for instance, at the top of my head, the Monetary Authority of Singapore, the Hong Kong Monetary Authority, the Dutch National Central Bank, the European Banking Authority. They have all issued guidance around basically the ethical use and the transparent use of AI and machine learning. So they're already thinking about it. I think it's very high on the agenda for supervisors to understand this, or to understand the way in which the banks are currently wanting to apply it, particularly in the credit scoring space and risk space. Supervisors are actually looking at this from a different standpoint too, from basically the calculation of capital. So we are hearing, for instance, that banks might be using some of this technology to come up more efficiently with their PDs, probably default, and LGDs to calculate their risk-weighted assets, for instance. And this may be leading to, again, sort of capital optimization. So supervisors are very much looking at this space quite closely at the moment.
Yeah.
Okay.
And I think, as you just said, sorry, but as you said, Joy, it goes beyond questions of consumer protection. There are many different areas.
Yeah.
We have one question from a participant who asks about whether there are any emerging trends in the field of RegTech and SupTech, specifically in Africa. Is that anything that you can say something about, or is this not a?
I think from a very, very high level perspective, we can safely say that developments, particularly in SupTech, across the board, not just in Africa, but really globally, are lagging. So we recognise that at the Hub. This is something that we are looking at. But in terms of RegTech, it's very difficult to say without sort of pulling out particular banks. But I would say that, for instance, the larger banks are probably much more active, perhaps. I don't know if I'm allowed to say the bank, but I do know of one particular bank, I will say in the southern part of Africa, that is using very actively some of this technology. They are using it very, very innovatively, perhaps, yes, again, in this sort of credit scoring type area, but really for also compliance reasons. What they're finding quite difficult, though, is, again, the use of the technology has to sort of be in tandem with where the supervisor and the central bank is at the moment. So I think one of their pain points is that they would like the central bank and the supervisor to work with them to further develop this technology so that it's mutually beneficial. At the moment, there's still a little bit of perhaps pushback because there is less understanding of its use. So I'll just leave it at that.
All right. Next is a question from Pedro.
Thank you so much for the talk. It was great, and for having you both with us. So I had a short question related to Chris' point before, and it was especially like you mentioned one of the examples, the second example in SupTech that is being developed with the assistance of highly incumbent players, so the main players today in Asia and so on. And then Raz also mentioned that with the emergence of tech things, you have these new types of players from other moving to finance. So I was thinking if there is a role for requirements such as interoperability and technology neutrality to kind of minimize these types of infrastructure capture, that I'm thinking like the incumbent players kind of limiting the migration from firms from other areas. And a second one was more like an exercise, and I just wanted to see what you will think about it. So I see kind of RegTech as this reducing the costs of firms to catch up with changes in regulation, and SupTech as improving the data availability for supervisors and more cooperation among them. So in the learning, as you mentioned as well. So I'm thinking like if you've seen the future, we having more types of experiments with regulation, because the cost of changing regulation won't be that high, and this coordination could be also improved. So in the learning, so if you see in the future that maybe we could see like better calibrations of norms and better like new types of experiments with sandbox and so on. Thank you.
Do you want to take the first one, Joy, and we share the second?
I'm very sorry. You'll have to remind me what the first one was again. I was focusing on the second.
Interoperability and
sorry, yes, with platforms and things and collaboration. Look, the word interoperability is the key word really when we talk about collaborating, particularly when it comes to digital innovation. It's a very, very big word because it involves so many facets. It involves various jurisdictions to begin with, and of course, as we know, those jurisdictions have different laws, different regulations. It involves pre-existing, or what you might like to say, legacy infrastructure, which operates off the past and not the future. It involves commitment from various different stakeholders to want to modernize towards technology and to having, interoperable rails, so to speak, between jurisdictions. So one of the ways that, the second use case that we described, for instance, one of the ways that perhaps certain stakeholders are trying to get there is by using these platforms. So this is just one way of trying to create or curate like a global interoperable platform to enable this kind of safe sandbox environment, to test, to interact, to be, in that sense, interoperable based on common problem and solutions. So that's one way of doing it. I think going forward, the future will be bright if we can if we can come to some agreement on what interoperable means. But maybe Ross, I can pass it here to you now.
Sure. Maybe to turn to the second question as to what effect RegTech and SupTech and financial technology generally will have on the way in which regulation is developed and amended. I wish I could predict the future. I can't, but I certainly do think that I think the regulation and lawmaking process will be more dynamic in future. That because I think that the technology itself and the market will be adjusting more quickly, and regulators will need to be on top of this very much, and to work very closely with financial institutions in developing regulation. So I think generally that one could expect that trend. Joy, would you like to?
Yeah, absolutely. And so I draw back to that first use case as well, which is the UK FCA digital reporting pilot. So this is basically a pilot or a project to make regulations machine readable and to execute them, machine executable regulation. And this is simply so that supervisors can indeed keep up with the regulations coming through, not just domestically, but also, of course, globally, and also for banks to also to keep up with the changes that will be quite rapid as we go forward.
Yeah, there is a question as to what degree, when you start basically coding regulation, what is the regulation at that point, and how do you interpret it? Is it the written regulation itself, or is it actually the code? And this is an issue that needs further consideration.
Right, exactly.
Can I come on that? Is it? I'm really interested in this topic. So how is this coordination taking place within the Techsprint? Because you have to devise more clear interpretations of the norm, and how does that coordination among regulators take place? Is it through the BIS or the forums, or like more?
So the Techsprint is maybe something slightly different. It is basically inviting fintech firms to basically approached some problem statements provided by supervisors. So these are real life problems. How can technology solve for these problems on this curated platform? So that's very slightly different to what we're talking about in terms of codifying regulation. Look, the FCA example is a domestic use case. So this is why I wanted to stress that it is domestic, because we are talking about quite a very big conceptual leap in how we understand regulation to begin with. But Ross makes the point that this is something, again, that is perhaps bigger than just the BIS. There needs to be far more understanding, I guess, of the implications of what happens when you do this. Is it just a compliance tool, or does it start to actually change the meaning of regulation itself? So these are questions, unfortunately, I can't answer at the moment either. But yes, certainly if you want to further study this and then inform us, we'd be very happy to.
Exactly. Exactly.
Take your views.
Okay, maybe I can ask a question myself. I was just wondering about the relationship between RegTech and SupTech in a sort of narrow sense. It seems to me that in the public debate, RegTech is something that everybody's talking about. And my suspicion is that the reason may be that this is something very much in the interest of financial institutions, right? If it makes life easier for them, it allows them, to submit all those reporting things that you've been talking about electronically, and it's something very much that they support and they push. Whereas SupTech would be the twin brother, basically the supervisory authorities stepping up and also using technology in a way to doing their job. And that is something not so much on people's minds. And I wonder whether you have any views on that, whether there is any sort of political story here in a way that, of course, the public administration is always slower and, it's not as well staffed and, that lacks the same resources that the industry has and that sort of thing, whether there is anything like that going on.
Well, yeah, I think if they are siblings, RegTech was probably born first.
Exactly.
And I think you would hear that. I think my recollection is that there was much more discussion of RegTech at some point than SupTech. As to the reasons, I don't really know, but I think a big part of it, as you say, was I think the enormous cost of regulatory compliance with firms trying to use these new technologies to do compliance better, but also cheaper. I think it's also relevant, I think, beyond industrialized countries, where you have in some developing countries that are at risk of losing correspondent banking relationships and are looking for ways to strengthen their own compliance procedures. But I don't know, Joy, if you'd like to add, but I think you're basically right, George.
Yeah, I think there is a little bit of terminology here used as well. I mean, when people started talking about RegTech initially, they did have in mind, the use of technology for regulatory and compliance purposes, whether that was used by financial institutions or whether that would be used by regulators and supervisors, for instance. Mm-hmm. And then this almost a splintering of terms kind of occurred really only in the last few years, actually, this use of the term SupTech. And this was really just geared towards specific tools for supervisors to use in their day-to-day activities. Very, very largely, this was about reporting. This was about reducing the burden of receiving paper-based regulatory returns, for instance. But then more and more it became an issue that, like you say, banks were actually turning to these new automated reporting tools, and supervisors then had to figure out how to actually receive them as well. So in that sense, SupTech was really, I would say, largely related to reporting and to reduce the compliance burdens around that. But I fully agree. SupTech, we've sort of mentioned this in the presentation, it is still lagging. But I think it's also it's lagging in areas where perhaps there is a newer and more innovative perhaps approach to supervision that supervisors still haven't quite worked out themselves, if that makes sense. So, you know, their business is very much about keeping on top of the risks. They do this in various different ways. They will do this desk-based, they do this horizontally across industries, and they do this face-to-face. So you have on-site, off-site, and then you have risk areas. I definitely see a very much a growing demand for SupTech tools in the analytics space. But I certainly can't see it replacing any of the human element in that sense. So on-site supervision, for instance, you just won't have technology use there, so to speak. So yeah, that's probably where I would draw the distinction.
And if I push you a little further, so if you know, we've been talking about interoperability before, to what extent are these two twin brothers, if they are twin brothers, interoperable in a sense that sort of they are technologically neutral, they can be, you know, the submission that institutions are making can be read and evaluated by regulators, no matter what software they use, what sort of technology they use. Is that
this is definitely where the UK project is very, very interesting. So this is what they are currently building right now. So regardless of software use, they are basically proposing a digital reporting system that all banks can effectively plug into the regulators using blockchain and using API. So again, this is like the next generation of technology that moves beyond kind of the software level to actually using APIs first and foremost, but also using blockchain technology to keep track of these reports via ledgers. So the UK project, for that reason, it is a front runner. It's very, very interesting. I think supervisors around the world are watching with keen interest to see how that goes. So in terms of that collaborative model, that is one to watch, I would say.
Excellent. That's great. Okay, so we have to hurry up because time is flying, but I have one more question in the pipeline from Thomas Papadogiannis. Sorry.
Yes. Can you hear and see me?
We can't see you, but we can hear you.
I did try to enable my camera, but I'm facing some kind of trouble, so you'll excuse me for this.
That's fine.
So my question is kind of a follow-up question to what Chris said earlier, because to the extent that financial institutions will collaborate with big tech firms in the future to use RegTech to fine-tune their regulatory compliance, brings to mind the collaboration between banking institutions and credit rating agencies in the era before the financial crisis. And we know that the lack of regulation as to how credit rating agencies worked back then led to problems that eventually created what we had in the global financial crisis. So it is worth asking maybe whether there is a need for regulation regarding the collaboration between financial institutions and big tech firms to the extent that they use RegTech to fine-tune their capital requirements, for example, their regulatory requirements.
All right. Just before you respond, can we just take a second question and then you pull them together? So the other speaker is still Giuseppe Loicano. Do you want to put your question?
Yes. Hello. Do you hear me?
Yes.
Yes.
Thank you for the presentation. My question is on technological neutrality. You already picked it up that regulators and supervisors cross-border need to move at the same speed, especially in SupTech for global supervision of global banks. What is the role of BIS or the roadmap of BIS and the Financial Stability Board to ensure that globally regulators and supervisors are moving at the same speed with the adoption of new technologies in the adoption of their supervisory practices? Thank you very much.
Great. So maybe you can wrap it up now with putting these two together.
Ross, do you want to take the first one? I can take the second one. Or I can.
Sure. Well, could you repeat the first question, please? I didn't quite. I was focused on the second one.
I think it's regulation of new partnerships between big tech and banks, I guess, in the RegTech space.
Yeah, I think it's a very interesting question. I don't. I think people have to think through the actual risks that this creates, and for what purposes they would be cooperating, for example, and whether that would create concerns vis-a-vis competition, for example. But I think that's a very new area that really needs further consideration.
I think one example as well. Oh, sorry.
Go ahead.
Oh, just one example there as well that is very high on the policy agenda is the cloud. So you have a handful of big techs that offer the cloud. Everyone is using it. To what extent should this be a critical infrastructure? So that's just one way of looking at it. Sorry.
Very true. Why don't you take the second one, Joy?
The second one. Well, this is actually good because I used to work for the Basel Committee, so I'll give the Basel Committee a quick plug there as well. So the regulation and supervision of global banks really comes down to the BIS committees, the FSB, the Basel Committee, CPMI, etc. So there are lots of forums to look at specifically this topic, and within those forums there are very active working groups looking at this exact topic. So how do we supervise global banks, but global banks that may be doing different things in the technology space? And how can we as supervisors make sure that we know what they're doing? The colleges, for instance, play a very big role here in terms of that dialogue between supervisors and the global banks as well. So I'll just leave it at that to say that it's a very, very good question, and one that, again, is currently on the policy agenda.
Well, thank you so much. This was really, really exciting, eye-opening for all of us. We've learned a lot. Thank you so much for being here with us and for sharing your experiences. I'm sure that the LFT team and beyond has learned a lot in terms of what's going on in the real world as opposed to the ivory tower of academia. But it tells me, that this sort of exchange is extremely valuable in both ways, because we get some reality check on what are the important critical issues, what is already going on. So if anything, then if I may conclude that we need more of this sort of exchange, I think that is really the way forward, how this sort of event should work. So thanks so much again for being here, and thanks for everybody for participating, debating, and asking questions. I hope this has been an interesting experience for you as well. And with that, I think we conclude.
Well, thank you very much, George. It's been a pleasure for us. I think we also benefited a lot from the discussion, and we want to thank you again for inviting us.
Right.
Thank you very much.
Have a great summer, everybody. And this somehow concludes also the summer semester, the academic semester. And it's been great to have these events throughout even during lockdown. So we make a virtue out of it. We have people from all over the world participating, which is great. And I hope that in the autumn we may be able to revert to physical presence events. But this has been truly exceptional. Thanks so much, and take care.
Thank you.
Yeah.
Thank you.
Thank you. Bye.
Bye-bye.